Hey everybody, Jason here. Happy Thursday. Hope you guys are all having a great day. So, opening up this video, starting it again with a nice little pop up. Last couple days we've done that. Those have basically been our highs, and then we came down a little bit for the day. Yesterday, by the end of the day, since Tesla kind of just petered off during the whole day, we ended up the day up about 2,000 ish, and then as after hours after it went up, I think we were up 7,000 or something for the day yesterday, um, and then today up 8,000 ish. We were kind of hovering around this $5,000 level for a little while. I guess little while being what, 40 minutes or so, and then now we're having another pretty nice little pop here. I did see that yesterday, and I did post it, but yesterday pretty much saw this again, this little wedge. So expect another leg up here, but all in all, we're still coming off of earnings, so I think Tesla's just really finding its footing. So far, it's really showing some comfort in these levels. So there was a lot of expectation after earnings to have a sell-off, and then after this pop-up, a lot of expectations to potentially pull back a bit. But I think this is right pretty much where we're gonna start consolidating, see another leg up. Like I don't know where we'll end up in the short term, but next year, 1,200, 1,500, I think somewhere in there is where we're going to be sitting for most of the time. But hopefully we do see just a little bit of stagnation, which would be pretty nice. Just gives us more time to sell our put credit spreads and purchase some more shares along the way. So I made one play today, basically just got rid of one of my put credit spreads that were down in the 700. So it was like a 700, 695. We only had another $5-6 to collect on it, so I did roll that up, and we're probably down just a hair on the position. Yep, there we go. 980, 975. So that's the only thing I opened up this morning. Very aggressive, not really recommended. But I think your aggressive levels now with Tesla are going to be anywhere 950, maybe even down to like 930 to 1,000. I think those would all be pretty aggressive. I think under 930, down to 880 ish, I don't think that's kind of like a mid risk level, and then below I think that's pretty low risk. If you're playing like 800 or below, I think that's pretty much low risk at this point. That's just my take on it. Do what you guys want, but hopefully you have been positioned for Tesla to move to the upside and taking some advantage of that. So just real quick, since that's the only play, I'll just go through the positions that we have open, which is quite a few. Just partially because I made a lot of them relatively quickly in the last few days, like just moving stuff up, moving it out a little bit, and that's pretty much all I've been doing, which is essentially taking profit from those put credit spreads where we didn't have much to realize anymore. So starting from the top, things that we have expiring tomorrow, just a couple covered calls. Well, actually just one covered call on our Gap shares. Actually got a dividend this morning, an extra $30. We have drip enabled, so that went back into purchasing a couple more shares, or whatever, got me a share and a half of Gap. Coinbase, this is basically two put credit spreads, not worth anything now. I don't know that we'd get it filled at $1. I'll just let it expire worthless, since we don't really need the cash to do anything else right now. And then I'll be done with Coinbase. Our Robinhood covered call, I can't believe this is worth $23 when Robinhood is worth down in the 34s. Just like, that's pretty crazy to me that we can actually collect a decent amount of premium up there. Those are expiring next week. Robinhood, one that I was hoping to get out of, as far as I was hoping the shares would get called away from me. So I was hoping to see a good earnings. Stock price went up and those shares went away because we can just use that to purchase more Tesla or to fund more put credit spreads. Palantir, 12 covered calls on our stock. So these ones, since we are running into earnings, and earnings is going to be November 9th. So as soon as these guys expire worthless, and if they don't happen to expire worthless, if we are up at that $27 level, I will buy them back for a loss. Doesn't really matter to me how earnings are, Palantir, on the short term, up or down. I want to hold those shares, and we're holding, I think, 500 and some plus six leaps or so at the $20 strike, and then one at 30 for the end of the year. And actually, this guy will probably be fine. I was thinking I can close that out if it comes down a little bit, but I don't think we'll see it rocket up to 30. That would be pretty crazy. Tilray, these are all part of the wheel that we're playing on. Tilray overall, we are definitely way down on that wheel. I mean, I guess $1,000 relative to the 500 shares or so that we own, it's not terrible. Relative to the stock price drop when we started getting in around $19, I think was the first set that we got assigned on. And then just kind of sold puts along the way. And now we get into the bulk of our put credit spreads just to look at levels here. So 11.5, I only have 6 more expiring. I mean, some of these are $10 wide. So we still have a okay amount here to collect. $82. What are these? 25 bucks. So a decent amount left to collect in these couple things. And then moving on to the following week, just a bunch of put credit spreads. And let's see, where's the most aggressive ones here? So 950s are our most aggressive, 10 wide. We originally collected $141 for these guys. And our lowest ones, $850. And we collected $1, only 25 cents left on those. And then we have more covered calls. So I have Cedar Fair and Hawaiian Airlines, both covered calls, doing pretty well on those. Hawaiian Airlines not looking so good. I think I bought that slightly after the big dip, at I think a cost basis of around $15. So we're still up on the shares, and I'll just continue to sell the covered calls on those guys. They can get called away. That's completely fine with me. Cedar Fair, I actually do like to hold those. For one, we got them at a very good cost basis. So we have an average cost of $19. We have the dividends on it. So dividends have gone back to purchase another 6.6 shares. So we will hold on to those. And then we get into a few more put credit spreads. So we've got some 930s. Let's see, November 19th. All right, so we have some 990, one 990, 980. Very, very aggressive. And all the way down to these 850s. 850s, we still have $35 more to collect on those. But we're right around this 900, 880 level for the majority of them. So 33 between these two. These are actually $10 wide here. Ended up getting filled at $137. Up a little bit on those. Our 880s. These are only $5 wide, but average credit of $63. Up on those a little bit. And then we do have one calendar spread. So obviously I see upside with Tesla. And we have until the 19th to close this thing out. So open these for just about 200 bucks. They're worth $500 now, up 174, 180%. So as we see some more movement to the upside, likely when I see somewhere around the $1,100 mark, which I think is coming, just because we've tested up there a couple times now. But I think the next level after that will be into the 1200s. So I don't think that's going to be a really big stopping point. Let's check it out. So then the following week, we have some 980s, or the one 980, which was very aggressive, and then the 880s, 860s. Getting into December, we have 10 at 900. What are these giving us? $2. $2, which is, geez, that is just awesome. $200 credit, we're up 56%, so definitely winning on those guys. 880s, don't even remember when I opened those up. And we actually have had these $990, $1,000 call debit spreads, and I've had these for a long time. I think I bought these back in April for $178. You could have picked these up for $1, 75 cents, 40 cents, 75, like 75 cents just earlier this month. That's crazy. So you could have taken $100 and turned it into basically 1,000. That's where this is headed. We're up 400% on this play, and I'll just let that thing go. I think we should be able to collect the full amount. So this will be about a $500 play into 5,000. Or no, excuse me, 4,000. Only 4,000. Our put credit spreads, these ones were rolled up from those 35 that we had for a very, very long time. Up a little bit on them now, and we do have plenty of time here, so pretty safe on those guys. 750, 740s. Those, oh, actually no, those were not rolled up from then. I think these were quite a bit lower. Our 35 that we've been holding for close to 9 months here, ones that I had to roll out when Tesla took its first pretty big dip. I had 35 of, I think they were like the 700 690s. So we took 10 of them, rolled them up to 750, 740. I could definitely handle rolling those up a little bit more. I'll probably do that today just because I'm going through this and recognizing it. Only $100 more to gain. I'll definitely roll those guys up. And then we have 27 at the 880, 870s. $247 credit originally, up just 10% on those. So as we roll, like, these next couple months are just gonna, I think, keep being pretty amazing, at least for the account. And then just depending on what Tesla does, that'll just dictate what goes on with our actual equity. And the 800, 790s, those are debit spreads. And these are all debit spreads, so up 160% on these guys. Opened up these for $340. These are about ready to close. They only have $80 more or so to gain between now and January 2022. Well, just one of them. Let's put where were we? So we're at 950. I wonder if that print was real. I'm going to put a closing order in on that at 950. And we're just going to go down, good till canceled. And we don't need to wait several months to collect an extra $50. So we'll put that one in. That kind of takes care of that. And then there's our other debit spreads, our 800, 790s. So these will be max gain up around 1,000, and we're pretty close. We only have another $100 to go there too. So we'll put some closing orders. We have 3 of these. I don't think we're there yet, but eventually this will reach it. January 2022. Don't need to wait until then. I will put a closing order on these 3 for $900, and good till canceled. It's pretty cool because we've held these since February. Hold them for a long time. Neo put. I'm bearish on Neo and pretty much all the Chinese stocks, pretty much across the board. A lot of it has to do with more research than just looking at charts or what people are saying. There's a lot of things going on in China that are not really, I mean, they're not in the media at all. So you kind of have to dive down a little bit, and maybe one of these days I'll just post my sources. And they're not necessarily financial or stock channels or videos or anything that I watch to gather that information. One of them happens to be a guy who rides his motorcycle through China and just sees like real life things about what's going on. There's a lot of facade that goes on that I can't really wrap my head around, but that's what I see. So, and just another reason that I can't get into like Alibaba or any of the Chinese stocks at this point. So we just have one of them, not a huge play. I mean, what did we pay for this thing? Where is it? $60. So that is my one outside play that I'm playing besides the wheel and Tesla and Palantir long term. So then we have our leaps on Palantir. We have 4 of them expiring in June at $20. Another one January 2023, or another 2 of those, and then one January 2024, another $20 leap on all those guys. And then we have this one January 2023 debit spread, opened up quite a while ago. Opened this up for $1,000, so we're already up 150% on this. I'm sure this is going to be a full gainer. But basically this will be $1,000 into, yeah, you can see the average cost here, $9.95, $1,000 into what I believe will be $5,000. And that is our current holdings in the public Robinhood, as far as the options plays. And then we can just take a look at the stock that we own. We've got 215 shares of Tesla. We purchased the last, I think, 3 shares this week. I'm just more bullish than ever on Tesla, and the market's confirmed that it's happy with the pricing, and we're starting to get some recognition there. So I think, I mean, it's definitely not like last chance to get into Tesla, and I don't think it would matter if you purchased it today, whether you pay $1,100 for it or $900 for it. If you're holding for the long term, or even long term ish, like 2 years, a year, 3 years, 5 years, something like that, you're just not going to be disappointed. And I don't think that cost basis of $100, even $100 difference, is going to make that much. That's not going to make any difference in the end. I'm very confident of that. Palantir, my second favorite stock. I almost should put these in order of my favorites, but Palantir, if you guys have been following me for a while, Palantir is my second favorite stock. You know, when we see this, what is it? $25 stock at 200, 300, 400 years from now. And yes, it'll take years. Just remember, I told you, don't sleep on Palantir. They're going to be huge. Robinhood, I wanted to get rid of it. And the reason we actually have 100.47 shares. So I'm going to keep selling the premium, try to get a sign out on it, but I'm going to keep track of the premium that I'm selling by just taking that premium and buying shares. So when I rolled out my covered call yesterday, whatever premium I collected, I just stuck that back in shares. Don't really care to hold that. Coca-Cola, just a long-term solid, gotta have something in there. It seems prudent to have not not something like, something volatile. They pay a solid dividend, solid company. Will probably go up over time. And every time I see somebody purchase a Coca-Cola or drinking Coke, I get to have a little smile. I'm like, yeah, I own some Coca-Cola. Tapestry, kind of for that same reason. Just because when I see somebody with a Coach bag trying to front like they have money, especially when they don't, like, I mean, I'm still wrapping my mind, like I said, around that like face or that facade of looking like you have money. I don't get it, and maybe it's I used to get it when I was younger, not anymore. But Tapestry, they make Coach. I think it's Kate Spade and one other one, but it just makes me smile. I'm happy, and we got this for a really good deal, right? We paid $13.81. That's our cost basis. We're up almost 200% on the shares. They're paying us a dividend now. Like, I don't know what else I need, so I can just hold these for a long time. It's fine. Not a company I'm super bullish on. I just like owning them. Robinhood, like I said, they could go away. Gap, bought into Gap a long time ago when Kanye West got in. That was really my catalyst for buying a bunch of shares. And I think I bought initially 200. It dropped down quite a bit, and I put on another 100. Cost basis, not too great, $16, so we're up 37%. But like today, we did get that drip, that dividend. Where's that guy? So we got a whole, $36. Plus we get to sell some covered calls on it, so not too bad. Not that I'm super bullish or anything on Old Navy. It's just kind of seeing what Kanye West has done for some shoe manufacturers. See if he can do something similar with Gap. Should be interesting. MGM, bought these when they were super cheap. Unfortunately, we sold a covered call on one of them that we rocketed right past. So I'll get 100 of the shares called away. I'm sure that's happening. That was originally purchased somewhat of as a reopening play, but yeah, we ended up with them at $20. We're up over 100% on those. They give you a little bit of dividend now, but it's like ridiculous. It's like a penny or something per share. I'm sure in the future that'll be going up. Yesterday, I did put some more money into QYLD and JEPI. So if we switch over here just to equity, I put another couple, I think 2,000, maybe 1,800 or 2,200, something like that, just to make it an even 10 grand, and another 10 over here just to make that an even 8 grand. We'll probably stick another 2 grand in these, and these are just consistent monthly paying dividend stocks. So we did receive our QYLD dividend, $70. So now that we stuck another $1,800 in there. So we should be seeing payments of around, $85, $90, maybe $100 at some point, and those get reinvested as well. So those should pretty much keep growing. Cedar Fair. This was initially some exposure to reopening. They are a REIT who owns a bunch of theme parks. A bunch of property there. Looks like we had a good drop this morning. They do pay a dividend, so that's when I'll just hold long term. Tilray. Oh, what is going on here, Tilray? Oh, that looked better. That looked better on the small chart. So we're down. You can see we're down $2,500 on the actual shares. At this point, we're probably down. I mean, we're down around $1,000 or so on our wheel total, but just something we'll just keep selling our covered calls and cash secured put every once in a while. Just continue on this wheel, and once in a while we'll go through the I have the spreadsheet up on Tilray, so we can check that out. Seawind, Clearway Energy, I purchased this as like a year and something ago when I was like, well, I want to have some money into some renewable energy, and I ended up with this stock. And I mean, it's been good for us. We paid about $20 a piece, up 75%. It does pay a dividend. So I originally purchased 100 shares. We've got 7.7 shares worth of dividends that went back into purchasing the shares. I could lose this stock. I'd be fine with that. But I don't mind holding it. I mean, with my money in Tesla, that's a pretty decent sustainable energy play right there. Hawaiian Airlines, I think we went over that, grabbed up a couple hundred shares, selling covered calls on that. Those could go away. I can lose those shares, no problem. And then we do have just some SPYs and some QQQs. I was putting a little bit of money every day in those. I think I was buying $20 a day. Not, just to kind of give a little basis to the account. Where is it? Total return. So we're not up a whole bunch on those. I really should have just stuck that same money into Tesla. Hindsight is 2020. And yeah, I actually very well might just sell these, sell them, put it all just into Tesla, these couple. Not really a huge point in holding those. Either that or one of the QYLDs or JPI. And then we have our cryptos. I purchased $3 a day. Bitcoin, Doge, and Ethereum. Doge having a really nice day, so that's the one we're up on the most. I do hold a lot, and I mean a lot, of Bitcoin in another account. I've been mining it. I've been mining it for years now. When my home computer even isn't, when I'm not using that one's mining. So just a way of making some extra money. I actually use the miners to heat my house, which is kind of a cool little side effect. So basically, we pay for the electricity. They go into the miners. The miners, they produce a bunch of heat, and then that's at my bottom floor. Open the door, let heat up. So we're saving on our energy costs as far as heating the house, not spending the gas. So that's a whole nother thing. So I'm a long-term holder in Bitcoin. I've had a little bit of Ethereum. I think I still have a bit. And I've actually used it, which is the crazy part, not just for investing. I've actually purchased a few things with it, some things that where the websites may or may not want to have a history, or I don't know, something trackable for when they sold a few items. But that is it. Holy crap, dude. Half an hour. And we're still where we're at. Up $8,000 on the day. If you guys stuck around for all that, holy smokes. Can't believe it, but there you go. There's my entire everything we're holding at this point. And then, if we have some other major moves, we may have some other big update. But my overall plan, which I laid out, thank goodness, like just maybe a month ago now, before Tesla rocketed up, was to get rid of the stocks that I don't want. I'll sell covered calls on them pretty close to the money. And when they go away, they go away. That's completely fine. The only ones I really care to own are going to be the ones I mentioned. So like Palantir, Tesla, 100%. I'll keep a little bit in QYLD and JEPI. Don't really have a good reason for it, but I'll keep those. Tapestry, just want to kind of keep it. But as far as like Robinhood and C1 and a few of those others, they can just completely go away. We'll collect premium until they do, and all the money will just go into Tesla. So luckily we made that transition before these big pops-ups. And there you go. Well, this is a half an hour. If you guys made it, holy crap. Love you so much. Thank you for all the support. Thank you for all the awesome messages. You guys are amazing. Super happy to help anybody out any way I can. All right, guys, I will end it here. I love you, and let's make a lot of money.